You were listening to chartingwealth.com for Tuesday, the 26th of September, 2017. We see that the S&P 500 down 0.20%. The Qs, the Nasdaq 100 down big 1.05%. Gold, of course, gold up 1.05% as might be expected, and 20-year bonds up 0.63%. Excuse me. Been flying all day back from Maui. It was a wonderful time out there. Thank you for your patience in us getting those podcasts loaded up from there. We're doing a lot of interesting work. And it is good to fly back across the country. Just got off planes after 13 hours, most all of it in the air. Took quite a while to go from Maui, Hawaii, to the east coast of the United States. Whew, so we're a little tired, but we'll knock this out for you as accurately and as best we can. What do we see going on? How's the latest candle forming? Big break from what we've seen over the last several weeks, with up movement actually for 4 weeks, strong up movement the last 2 weeks. And we never had a weekly vertical crossover going up. That is telling. We now have a red open box spinning top for the first day of this 5-day candle. So only 1/5 of it is drawn. Derivative oscillator still reducing, still in the negative, but it does appear that the PPO, the price percent oscillator, does appear to be moving down, not just sideways, but down a little bit. That's really hard to call. But we do see some down movement as far as price goes. Now, let's look at what's going on the 2-day chart. It appears to be getting close to crossing over, getting closer. Derivative oscillator is still positive. PPO is still positive, but we have what has been a break. The latest the 2-day candle on the 26th of September, that broke the trend line. It had been a long trend line for many days going up, actually since the market, it actually had a weekly vertical crossover back on the 12th, and it had been going up prior to that. I'm sorry, that was a 2-day vertical crossover, not a weekly. And of course, still in a confirmed down move. So if we do have a drop over and the S&P 500 crosses over going down on the 2-day chart, then we'll be looking for an entry point on our 4-hour chart. What's it doing? Continuing to move down strongly for several days. Derivative oscillator heating up in energy. We'll continue to watch and pay attention to what we see. Of course, it blew through the 2-day trend line back on the morning of Friday the 22nd of September. So we'll continue to watch and see what we see. So now let's go and take a look at the QQQ, or the Qs, the cubes. The Nasdaq 100 is what this ETF represents, and we see a spinning top for the weekly candle ending on the 22nd of Friday the 22nd. We now see this latest week forming up with a strong down move. Of course, what were we looking for? Well, we had on the 2-day chart, and this is something that we talked about already occurring, we had on the 2-day chart crossover going down back on the 22nd. And of course, that meant that the 2-day chart was now moving down in the same direction as the weekly chart. So what are we then looking for? Well, of course, we're looking for a consequent pullback and then a down move on the 4-hour chart. 4-hour chart, however, has not had a pullback for us. It's just continued to move down, down, down. Now, if we look at the 2-hour chart, do we have any kind of pullback? Nope, we don't have one there either. So we're waiting to see if we're going to have a confirmed pullback in that 4-hour chart and a potential jumping in point. We don't just willy-nilly jump in. We have worked on trying to come up with procedures for jumping in when that crossover occurs. You, of course, can attempt to try what we do on the weekly chart. That is at 10:30 a.m. the morning after the crossover occurs. You can try to jump in again on the 4-hour chart, but it's haphazard and there is no consistency in that. That's why we like to see a pullback on the 4-hour chart. That means going in the opposite direction of the down move, in this case, of the 2-day and the weekly chart, and then a move back over, crossover going down after it moves up. That's what we would be looking for in the future. We don't have that yet, so we'll continue to see how all this plays out. What do we see going on the 20-year bond fund? Like we said, down 0.63%, been down over the last 2 weeks. Did break, well, we see that the new week has started with a green spinning top, means indecision. Still in the green, but the derivative oscillator is losing energy, and the price percent oscillator is still positive in bonds, even after the prior 2 weeks of down moves and the 2-day crossover going down that occurred back on the 14th of September. That 2-day candle hearkened what happened over the next several days, both the 18th, the 2-day candle on the 18th and the 20th, and then starting on the 22nd and throughout the course of the latest 2-day candle, what have we seen happen? Well, we've seen it break through and start moving back up in the same direction as the weekly chart. We have no trade because the 2-day chart is in a confirmed down move. We do see an up move, a strong up move on that 4-hour chart, so we'll continue to watch, see what we see. If that 2-day chart rotates around and starts heading up, then we'll look for a jumping in point. Lastly, we look at GLD, gold. What has it been doing? Of course, long run up in gold. That ended back on the 15th of September. And then, of course, further down on the 22nd of September, that week ending then. So far, first day of this latest 2-day candle, we do see more, well, we see up movement for the day. This 2-day chart, again, it's the average, it's the Heikin-Ashi average pace candlestick. And of course, we'll just see how that continues to form up. Means the average pace is off on the weekly chart, even though there was strong up movement for gold. We can see that in the 2-day chart. So again, not enough up movement to push through the down trend line, and the derivative oscillator continued to heat up. PPO not going down as steep. And of course, as we jump into the 4-hour chart, what do we see? 4-hour chart looks like it's trying to cross over going up. So keep your eye on that. Those of you who use this 4-hour chart as your total trading chart in gold, was a good trade over the last several weeks. Would have gotten you in to a down move on gold, where of course you could have purchased put option contracts, virtual ones, and ridden that somewhere from a jumping in point of around 127.35 to as low as 122.49. Just beautiful stuff. Finally starting to turn around. So if you jumped in that, if you do see it cross over going back up, you should most definitely pull the plug if you didn't get out at the bottom that it's already hit. That's where we are, folks, as we come to the end of the day on Monday, the 25th of September, as we go into Tuesday, the 26th. Thank you for bearing with me today. A little bit tired after 13 hours of flying, but glad to be back in the saddle. If you have questions, problems, concerns, let us hear from you. CW@chartingwealth.com. Don't forget, at the end of the month, we will end the quarter officially, and we will be having another training for everyone who took the quarterly training that we offered in the past. If you are a member and you just go to chartingwealth.com, sign up for the daily market review, you can specially request that original training on the quarterly chart. So if you send us an email, particularly when you receive your daily market review email, just forward that back to us and put somewhere in that email the word quarterly. You can say, I want your quarterly training, I want quarterly this, whatever. We'll send it to you. Along with that comes your own quarterly charts for you to use. You will be fascinated by this. We see, I mean, it is just the most unbelievable chart. Just to give those who haven't watched the training yet, haven't gone through it, it is incredible. When you look back at this chart over a 20-plus year period, you of course see it would have gotten you out of the market right as the market started to roll over in mid-2000, would have gotten you back into the market as it started moving back up right at the end of 2004, all the way up to somewhere in about mid-2008, gotten you out of that huge drop, gotten you back in for a huge run-up, starting at around the beginning of 2011. It is just a magical, beautiful chart. We also talk about the crazy Trump effect, where the market literally is poised to roll over. Hasn't happened in 20-something years, where it just sort of went sideways and then rotated back over, going up on the price percent oscillator. Amazing stuff. We would like to share that with you. Again, subscribe at chartingwealth.com. God bless, my friends. Great to be back with you. We look forward to continuing coming to you every single day these markets are open. All the best from the whole team here at chartingwealth.com.